some commendable work over the last 5 decades DMFL has done in terms of, in many ways, contributing to India's nation building. And we've seen many cycles. And it's so much of experience and core memory sitting here on stage. So, so can I have a big round of applause to Vishal and Sonia, please? So Vishal, the first question to us, you've lived through the year 91, 2008, 2013, 91, 2008, then the demon, and these were all time when India was sort of disrupted, and you've seen some of them are opportunities, some of them are sort of crisis. So is India really a final destination, or is it at its core in a diversification mode?
So I think, let me answer that question a bit differently. One is, see, India is no longer a small economy. It is a very, very large economy. India matters a lot in terms of its markets for consumption in a big way globally. And there's every single large multinational who will want to have a business in India from an India market perspective. And like every country will go through some kind of crisis over time. India has seen its crisis, and it's always come out stronger. And you know, India is a story about all of you guys in this room. India is really a story about great management teams, great founders who've managed to build very good businesses. And as I said earlier, the operating environment in India is not easy. And I think India will continue to do so. You do hear a lot of sort of pushback today, especially when we speak to many large investors. India does not have a play in AI. India does not have a play in defense, in scale manufacturing, which are some of the large growth engines in the world. And why do we need to own India, right? But I think things may be very, very different 3 to 4 years down the line. I think if AI has to grow at the rate it has to grow, it will require many people in India to support the application, support the developments, and just support companies, right, to get the best out of the AI. So, and we don't know how it will play out. It's very early. So I think even this whole context today about why is India a great sort of portfolio addition from an FPI perspective, I think is temporary. I think India's growth story is quite solid. We should try to grow faster, maybe at a 9% clip or a 10% clip. But again, just the way we are structured is difficult to do. But you will find companies, you will find promoters, you will find managements who will be able to grow at much higher rates. And our job is to back those founders, back those companies, and make sure they keep delivering and keep creating a value system, as we heard earlier from Niranjan Bhai, that they create a value creation system whereby these companies endure over 100 years.
And having seen the current disruption, the world is at the most peaceful time ever. But on a serious note, right, in terms of what's happening in the world now, how do you see, as somebody who's observed things from outside the ring, where we are now compared to what it was 10, 15, 20, 25? Is it just a blip, or is it something which is which changed the direction of how the world would move?
Yes, I think if the question is from a global context, I think the genie's out of the bag, right? I mean, no one is going to trust the US the way it's been trusted over the last many decades. The US wants to be its own friend first. And they want to make sure that everything they do has to be in their interest first, and it's very, very clear. And that completely changes the entire global dynamic because the US was a trusted friend. The US managed to keep peace in the world, and it was it is a great trading partner, but now it's a great trading partner at an expense of a tariff. So that's very clear, and that completely changes the geopolitical dynamic. And you have this great tussle which is going on between two superpowers. the China power and the China urge to beat the US, which is very clear. And India has to figure its way out in this tension between these two countries. And I think it will. I think the role of being neutral, the role of being non-interfering, the role of managing your own business, I think is the right sort of tact and the right play. And I feel our government is playing it very well.
Cool. And Sonia, how many IPOs would you have sort of led, if you have to give a number?
First of all, very warm welcome to all the entrepreneurs who are here.
Yeah.
And we are very, very delighted to part with Hurun on this inaugural award. And for us, sorry, but I have to, because I'm very overwhelmed with the attendance from so many entrepreneurs. And it's a salute to them that we exist, right? It is their hard work. We are just a facilitator to marry them to another pool of capital, whether it's private or public. So I think the count doesn't matter, because I've been with JM my whole life.
Yeah.
So I'm married for 25 years, but I'm married to JM for 30. So
Round of applause, please.
So JM has been number one in IPOs this year, FY26, last year. So, we try to make sure that we get the real gems for the public. So, I think
done so many IPOs, let's put it that way. But having heard from what Vishal just said a couple of minutes back, right? What has changed in terms of a founder discussion when it comes to listing, selling a stake, raising private capital? What has changed in the last maybe 5 years or 10 years? Have you seen some sort of significant appetite or change in thought process?
Yeah, a very big sea change. I think one of the points Vishal mentioned in his inaugural address was the fact that the width of companies that we are seeing, the kind of companies who we are taking for the IPO has really widened and deepened. When we started my career, it was largely established industrial companies raising capital for capex and deleveraging to set up new plant or maybe get equity to fund acquisitions. But today, the whole surge of private equity that has come in, who have supported the companies which early on in their life. I think one huge source of IPOs is them wanting to exit. And sometimes it's happening, within 3 years of them investing in the company. The other is a lot of first generation entrepreneurs who are, IPOing with intellectual capital, who start from day one are backed by VCs and then finally, get to a stage where there are growth capital partners. So, especially in digital and new age tech, a lot of companies who are coming to the market who may not even be profit making, right? But have a unique proposition, like Dr. Hiranandani was saying, really adding value to their customers, who investors are really understanding that, it's a matter of time when they will become profitable. So I think it's the width, it's the stage of growth. It's also the third most important thing is often now, we are seeing it's a lot more offer for sales where it is secondaries. And sometimes the companies are just so profitable, and I can see a lot of companies who are so profitable, they don't need to raise money, but they therefore to list, they have to offer a little bit of stake to the public, and they have no choice but for the promoter families to sell their stake to enable listing. So I think, huge sea change.
I think it's offer for sale is what you're seeing now?
Offer for sale a lot more, yeah.
Okay. And how are these IPOs being priced now, or from the opportunities being priced, right? I think when you do a pricing industry, you cannot just price from a institutional perspective, but you also have to look from a retail standpoint, right? Has it changed in the last 10 years with all the tech? Now you've got Shashwat here who's built Bharat Pay, and there's interesting different sort of companies that's been built, right? I think, has that changed in the last 10 years?
Yeah, like I said, it goes with the kind of companies that we're listing, right? So when we started, it was always price earnings multiple JM did the first company in the country on a EV to EBITDA, which was Bharti Airtel, right? It was not a profitable company, so we priced it at EV to EBITDA levels. And now, you know, during the dot-com boom, people were pricing it to revenue and then maybe footfalls or eyeballs or whatever it was. But sanity comes in, bubbles see their logical end, and I think it's back to maybe not current profitability, but coming down to maybe unit economics, trying to see maybe 2-year out EBITDA or profitability, but at the end of the day, it is still 101 principles. Is the company adding value? And is the company going to eventually have the cash flows to continue their growth momentum?
Yeah, I've seen it. When I was investing about 6, 7, 8 years back, it was more about growth. So all of a sudden, we have the guts to ask about cash flows and profits last 2 years. So that's a good change. So Vishal, I really want to ask you more from an architectural standpoint. So if you have to plot Indian capitalism the next 5 years, what will the axis be?
Wow, that's an interesting question. So I think Indian capitalism is here to stay, but it's very balanced capitalism, right? I think India will not allow blatant capitalism the way I see it. Our value system is very strong to allow blatant capitalism. But having said that, there is, the conversation at home, I think, has changed a lot in India. One is, I think, entrepreneurs have a lot more energy. The energy comes with capital from private equity, venture capital, allows them to grow faster and build companies faster. When you look at families, the conversations are very different because most Indian businesses now will be in second or third or fourth generations also. People have sort of multiple businesses and they want to divide those businesses up. So there are new legacies that will be created. We've seen the rise of family offices, which is again sort of a development of a capitalist society where you don't have to run your business as a second or third generation sort of founder. You can bring in professionals, you can partner professionals. As Sonia said, you can do an offer for sale, you can raise that capital that goes into a family office, and it's managed in a very professional way, which creates long-term value, and the portfolio of the family gets diversified. So I think we are seeing all kinds of capitalism play out in India, and that trend is only going to get stronger. I think just the amount of clients we have now in our wealth management business are second or third generations of businesses who are managing profits or cash flow which they've generated from either OFSs or dividends. So I think we're seeing a big change in the way we're seeing capitalism being built in India. You're seeing, when you talked about investment in startups, investment in loss-making companies, you'll be amazed that a couple of years back, the largest participant in those stories was not a Naren or a Puneet's fund. It was actually family offices out of India who were funding some of these companies, even though they were loss-making. I would have never imagined that happening even 10 years ago. But having said that, India still needs a lot more investment in R&D. India needs to be a lot more innovative. And the Indian investor community needs to be bold. At least the public markets need to be a lot bold. We see the private markets being more bold in terms of supplying capital for R&D as well as for innovative ideas. And that we don't see. And therefore, one worry I always have is that when we see our pipeline of IPOs today, I would not be surprised in the next 4 years if more than 10 lakh crores is going to get raised in terms of selling by non-public market institutions to public market institutions. And that will not happen unless you have the FPIs and you have foreign money, which also comes into India. India needs both domestic capital as well as foreign money. And again, a lot of investment in R&D and innovation, without which I don't think we'll be cutting edge. So again, there are a lot of companies in this room who are doing it. Sometimes the private side sees it easy, but the public markets are still very focused on next quarter and the quarter after that. So while you have phenomenal changes in capitalism, you also have some drawbacks where we need to correct ourselves.
I have to ask you this one last question because Vishal, you're also an entrepreneur. You're building a large business, and just in 1 minute, right? What is the legacy that you would like to leave behind as you build JMFL in the next?
I think I have to continue with the honest sort of, talk we heard from Dr. Hirandani, right? I mean, I don't know the answer. It's very difficult, right? For me, my son is an entrepreneur in San Francisco. He's raised money in his own startup. He's a techie. He's 22 years old and running his own technology AI business. And my daughter wants to study neuroscience, and she's in a different field altogether. So right now I want to focus on 10 years and build my business. I'll think about legacy later. Yeah.
On the note, big round of applause to Vishal and Sonia, please.
Thank you so much, speakers.